Hey,
Hey Eric, how are you?
I am good. How you doing, George?
Good. Busy but good. I guess you're super
That's good.
busy too.
We both have hats today.
Yeah, funny because it's not my background, but it's raining here in Greece today. So, you know,
Raining, really? Okay.
yeah, we needed
You-
some.
You're outside of Athens, right? You said?
I'm on the suburbs on the south side, near the sea, which is nice.
Yeah.
But yeah, it's just raining all over Greece today. Uh, but it was needed. We had a heat wave for the past 2 weeks, a lot of fires
You ever,
again.
have you ever seen there's like one of these meme clips on Twitter that always seems to pop up on my screen where it compares the German weather lady to
Oh
the
yeah.
Greek weather lady.
No, that's yeah, I've seen that. But the Greek one is
I love
singing
it.
and dancing. It
That's the
happens when
way
you
that's
have
you
it's a
guys
sun.
know how to live. That's the way you have to live, right?
A bit too much. Yeah, that's the nice part about Greece. I've said to everybody, it's like for retirement, and if you don't have to, if you're comfortable with your money and you don't have to work a lot, it's really nice. But if you want to get a job, it's horrible
Yeah.
because the wages in Greece are just insanely low
Mhm.
across the board. So yeah, getting a job at a company or something like that, not the best place, not the best place. But also
Right.
for stock investing, it's good because we got 0% taxes on capital gains on stocks.
Yeah.
So
I don't think many people know that.
no, no. So it's a bit of a sweet spot for what I do.
I was just I was in Switzerland a couple of weeks ago, and I went to this place. There's a place called Zug. It's just
Yeah,
south of Zurich. Um, and it's supposed to be like, the crypto capital of the world or whatever, and because it has low taxes. But even
yeah,
in Zug, I think it's still like 11% taxes there.
yeah.
Like,
Which is again more than Greece right now.
yeah,
And I don't see Greece changing it anytime soon because the investing world in Greece is dead.
right.
Has been since the financial crisis, where a lot of people got liquidated.
Hmm.
Uh, it's like 2000 plus financial crisis. Those two things kind of killed the investing
Right.
world in Greece, and I'm trying to bring it back, doing my best to show people that it's not that
One
hard.
man, one man's
Yeah,
efforts.
I'm just trying to show people it's all hard, just buy indexes if you don't want to do anything and, don't have your money sitting in the bank. It's not the best. It just loses value. So
Right.
try to find appreciating assets. Bitcoin also. I really like Ethereum, Solana, Sui. I think those from the crypto world are really strong. And we've seen Ethereum now adopted widely. Even Tom Lee and Peter Thiel are backing it, which is big boost of confidence.
Hmm.
Uh, and we see more, which one? I think a bank yesterday announced that they're tokenizing assets on the Ethereum chain. And I think we're going to see more and more of that happening. So yeah, so I mean, those assets are really good to hold, and again, even indexes, individual stocks, whatever, just money sitting in the bank. So I'm trying to teach people, just loses value. Inflation adjusted, it just completely loses value. Dollar, euro, everything loses value. I mean, we've seen the dollar this year get decimated, although it's getting some strength in the past 3 days since the euro trade deal. But I think Trump wants it low for exports, so I think he's gonna take it even lower over his term. But remains to be seen. Most of my assets are tied up in dollars, so it's not the best thing. But I try not to convert them into euro, so it's not really impacting me at all. But you've blown up on Twitter since the last time we spoke.
Yeah.
Crazy.
Just in the last month. Yeah. With
Yeah.
all the talk about the next Carvana. So that seems to like get people.
Yeah, I mean,
Because
he had
first,
decimated the stock when it was like single digits, and now it broke 400 again as he posted. So, I mean,
Mhm.
that's had a crazy run and a very volatile one. 400 to 4, and then back to 400 plus. You know,
Yeah, it is crazy.
it is a
Um,
crazy one. And I think in general, now markets are going to react well after Microsoft, Meta, all the earnings we've got. The earnings season has been very strong.
Yeah.
I think this is a potential catalyst for a leg higher that we needed.
I hope so. Yeah, I hope so. I mean, you never know. And I hear
Never,
people
yeah.
say all the time that like, oh, it's optimism or whatever. All these sentiment indices right now are kind of high. So therefore, we're due for a pullback. But
Yeah,
yeah,
I mean, we've had a 30 plus percent run off the lows in like 2 months. So pullback is coming. I think as soon as we get some bad earnings, maybe, I don't know, if Nvidia disappoints or something like that, we could see a pullback. Or if we see China trade deal not happening, we could see a pullback.
right.
Uh, but we're definitely, I think, yesterday's earnings again confirmed that AI is not a bubble.
Yeah.
The earnings growth is there, the capex that we expect from companies is there, and it's even higher than people expected. So this is definitely not a repeat of the 2000 internet bubble, in my
Hmm.
opinion.
Hmm.
And the new stock you've identified is also a bit AI related from their valuation models on the houses and all the algorithms they run on Opendoor. And it seems a very, very interesting business model. Obviously, hasn't worked in the past for Zillow and the others and Redfin, and that they tried
Right.
it.
Hmm.
And also, Opendoor has had a very rocky past, let's put it that way, with a lot of times in the past, like 2022, from what I saw, were selling houses below the purchasing value, so they were losing money on that. But I saw recently they came out with this cash plus model that is changing a lot of the issues the iBuying model in general used to have in the past. Now they have some downside protection because they share risk with the client. Agents are no longer competitors; they are partners now, which is also another great thing. So a lot happening on Opendoor, and I'm just wanted to do a call with you because I opened a small position at 88 cents, so obviously it's gone really well. I bought 150,000 shares and I've kept them. Um, I have a bigger position in rocket companies for a while now, which isn't a direct
Rocket, you said?
competitor. Yeah, RKT,
Yeah, yeah. Okay. Yeah.
which bought Redfin and Mr. Cooper, and that's
Yeah.
created some nice synergies with their acquisitions. A lot to prove on their side too. So both
Hmm.
companies have a lot to prove now. Uh,
Right.
but I'm definitely very interested in Open Door. Very interested to see how you came up with the 82 price target. Because I mean, if it goes there, I think we're all gonna celebrate and drink some ouzo all together.
That's
So
right.
yeah, I just wanted to break it down a bit and get your thoughts and poke your brain a bit on Open Door. I also saw you started a new position on Upstart.
Yes. Yeah.
There's the famous clip from Upstart from that guy on CNBC who had bought it
Yes.
back in the year, and when she was asked what do they actually do, he had no idea, and he was saying the signal is
Yeah.
cutting down. So definitely, a lot of people must be familiar with the company. Open Door, though, not so much. Was a much smaller company, especially when you first bought it at around 50 something cents. I think it was
I
at
didn't buy it. I didn't buy it that low, unfortunately.
Oh,
I
okay.
think I
Well,
bought some in the 80s, some in the 70s.
still, I mean, very low
Yeah.
compared to where it is today. It's been a very volatile ride. I think that's what happens when retail uh, enters
Hmm.
a stock. But I think with the changes they're making, they could potentially attract institutional money too. So that should smooth it out a bit. But we can see also what the retail can do. Palantir being the prime example. They've sent that
Yeah.
stock to $400 billion valuation,
Right. Right.
for example, which is, for me, it's an insanity. I love the company. I mean, I recommended it when it was $7. It was one of my first recommendations ever on social media before Super Micro. And yeah, I just love the company, but I really don't see the logic in the valuation they have currently. To me, it's just insane. You're paying like 100 years worth of revenues. and earnings buying it at these prices. So unless their growth skyrockets in a way that we're not expecting to, which potentially could, government contracts, partnership with Thiel and Trump and all that stuff. You never know. But anyways, but it's just an example of what retail can actually do and the power of retail uh,
Yeah. Mhm.
lately. And as you've also posted, I don't think retail anymore is dumb money, as we used to call it years ago. I think that's changing. Retail has basically participated in this whole rally that markets have done. Institutions are still net short, so retail saw it, bought the dip, and has actually profited massively from it in the past few months, whereas institutions and the
Mhm.
smart money, as we say, hasn't. So
Right.
definitely very interesting how the retail is becoming much more powerful and much smarter now. So that's why I think a lot of people would be interested to go through some questions on Opendoor,
Okay.
because the retail crowd has entered, and I think it's a very, very interesting company, and as we call it, a potential 100 bagger. Our BT2 has done very well, so that's
Mhm.
possibly going to turn into a 100 bagger too. So I
Yeah.
think you've done very, very well lately with your calls. Uh, Cipher and IREN have pumped a lot, and those are
Yeah. They've only
also doing
doubled, so not as
yeah,
much. But I think they're still, I mean, with the Meta earnings last night,
yeah, they're getting help.
sort of, and Microsoft, I mean, it sort of shows like that they're going to need those kinds of players. But
Oh, for sure.
can I just take 1 minute though?
Yeah,
Like
of course.
my dog, the dog walker just was here, took the
Oh, yeah.
dogs, and I left her too much money. She wants me to like, take back some of the money I left for her. So just hang on 1 second. I'll be right back
Yeah,
in
yeah,
one
that's
minute.
fine. That's fine. Don't worry.
Okay. Oops. Okay.
Perfect.
So we're recording. So you just want to like
Yeah,
start,
yeah.
and you're gonna
So
post this later today or something?
yeah, I'll post it later on my X and
Mhm.
my Instagram too, because I have a bigger card on Instagram, but
Oh, yeah. Yeah. Yeah.
X
I
is.
got I got to do more on Instagram.
They're both. I think X is better for news related and more,
Text. Great.
yeah, more tech stuff, whereas Instagram is nice. Like I post most of my stuff on my stories, and it's usually just reposting my tweets on my story. So that's
Mhm.
most of the content on X, or Instagram. But you know, there's a. It's funny. People on Instagram don't like X, and people on X don't like Instagram.
Yeah.
It's
Yeah.
the two
I've
crowds
noticed.
don't
I
align
know.
together.
Right.
Um, but yeah, so let's go through. No, let's go through Open Door. Some of the questions I sent to you. So to begin with, uh, so you've called it an 100 bagger and set the price at $82. So I'm just wondering if you can walk us through the fundamental transformation you see happening at Open Door and what justifies us. It's a very ambitious target. So what do you think justifies such a target?
Okay, sure. So Opendoor is not exactly the same kind of company as Carvana. Although I've made that link to, I guess the similarities are they are trying to build a national platform, one for buying and selling cars, one for buying and selling homes in the U.S. to begin with, and then presumably they both could expand internationally if they proved out their models, which Carvana has done and Opendoor hasn't done yet. They both need debt to execute their business models. Um, and I guess the other similarities are they went through a period. The high interest rates obviously hurt both businesses, made it both more challenging. They've had they had declining gross margins into the teeth of that of the hike in interest rates, and on a and basically at one point, at the low point, investors sort of lost faith in the business model of both. Um, Carvana, the low point obviously was in December of 2022, and I think when we look back, we'll say that the low point for Opendoor was probably a month or so ago when it hit 50 cents, down from a high of like 39 bucks, just after they de-SPACed a few years ago. Um, so the potential, the strategic, potential for a comeback is there. But as I think you've mentioned, George, like there's obviously some differences too. Um, but and we can go into those, those differences. But I guess like at a high level, like when you ask the question, like what's the fundamental reason that Opendoor is going to come back? Well, Opendoor is going to come back because they have this sort of core national platform of iBuying, which they can make money from. Not as much money per unit as
Mhm.
Carvana, but they can make money from it. They've had a um, reduction in the amount of competition they have in that business because
Mhm.
some people, several people were not able to make money from it and backed off that business. So there's like maybe really only one regional player left as a competitor. There are a lot of ancillary services that they can wrap around that
Mhm.
core iBuying business, which can improve their gross margins and they can make money from. And the big kind of wild card, I think, is the potential to leverage the data that they've used from buying and selling, selling 200,000 plus
Mhm.
homes over the last whatever several years, and in all likelihood, the value of that data gets unlocked, with a partnership with somebody like a Palantir, a Grok, or an
Mhm.
OpenAI. And if they unlock that, that has the potential to radically improve their ability to be successful in the iBuying business, which Redfin and Zillow
Mhm.
never went far enough down the path to be able to leverage the data that they were
Mhm.
accruing there. And also it opens up doors to a whole new uh, SaaS-like revenue stream, which they could potentially, together with that partner, uh, you know, not spin out, but like turn into its own business of like selling the data on, what's happening in the real estate market to institutional investors
Mhm.
or, others. So and that at very, very high margins. So that's the sort of like the sort of the table that I see in front of the company for the next 5 years. I think the biggest question mark about whether they're going to be able to achieve that is sort of questions around the current management team and the current CEO. I think it's like it's an open question still.
Mhm.
I think Carrie Wheeler, who's the CEO, she was the CFO when there was sort of like a first generation of founders running the company. Those founders got the company into trouble in the sense that they were executing this iBuying model, in this sort of zero interest rate environment.
Mhm.
They accumulated a lot of inventory that suddenly was worth a lot less than they bought it for, and they put the company's sort of viability in question. Several of those first generation folks left, departed the company. Carrie was elevated from CFO at the time, and she comes from like a financial background, to CEO. And I think to her credit, she's done a lot of good over
Mhm.
the last, I think it's 2.5, 3 years she's been in charge in cleaning things up, and doing things that that they had to do at Carvana, like cutting fixed costs wherever they could, sort of zeroing in on some new adjacent businesses that they've just recently started to announce that helps them make nice with agents and make nice with customers. They used to be seen as just sort of like the buyer of last resort, I guess, that was sort of dealing with like lowball kind of, you know, uh, houses, small offers, kind of service of last resort almost.
Mhm.
Agents hated them because they cut out the agents and their 6% fee that they got. So they were always kind of bad mouthing Opendoor in the market. So there's been a move there recently to kind of make amends there and open up some new asset light type revenue streams. Um, but I guess the question about Carrie is she like an Alex Karp? Is she like an Elon Musk? Is she, like another sort of a more tech-oriented person who can really, or Rich Barton for that matter, for Zillow, where they can sort of see all these ancillary services, and Rich didn't get there with Zillow, by the way, but and really kind of execute on them, do a partnership with like with a Palantir and or so forth. I don't know, like that. It's really an open question about her. So I think that would be my kind of biggest misgiving about like whether they're able to achieve that. But I think there are going to be others that recognize the value of this platform. So it's either going to be carrying the ball forward
Mhm.
and kind of, towards this $82 price target, or she will leave on her own accord. The board will ask her to leave, or there will be activists that I'm sure will show up, outside the company with their own plans and, their own kind of stand-in management team, which they'll put forward. And shareholders will have the opportunity to vote them in if they think that they're a superior management team to the current one.
Okay. Definitely. I agree with a lot of those points, and it definitely sounds interesting. Yeah. One of the question marks I had also was about the management team, because there's been mishaps in the past. And also, Kari was there when they were buying homes and selling them below purchase value. So, for example, August 22, I have a figure that 42% of the homes were sold below market value, purchase value, which I mean, that's a big mistake, and something definitely went wrong there. And also, as we know, in the real estate market, inventory costs a lot to maintain. So it's very a capital intensive business. And if the inventory cycles are long, that puts a high burden on the business. And their inventory cycles were long, but they seem to be going down. I think, as we said, the new cash plus model is definitely going to help regarding inventory. I think we're going to see cycles reducing a lot there, which would be a big opportunity and bullish for Opendoor in general. But a question I have now is regarding one, they have a high amount of debt because they need debt to finance all the purchases they're doing. So definitely high interest rates right now are affecting them both on the housing market side, which we've seen is still very weak, and with Powell being very stubborn from what we've seen for the foreseeable future until he lowers rates, because he wasn't that open yesterday for a September cut. So I hope he does cut the rates, because I think inflation is very close to target, and I think the interest payments on debt for the country are a much bigger problem long term than the short term problem, the 0.05, because core PC is at 2.5%, right? So, I mean, I think doing this much damage on the debt side because of a 0.05, I think is a big mistake. But I think that's where we are at the moment. So it definitely impacts companies with high debt as Opendoor. Plus, it's also in the housing market, so getting hit both sides from the high rates. So I wanted to see your thoughts, one, on their debt, which from what I see stands at 2.6 billion right now, and the high cash burn they've been experiencing. So I have an operating cash flow of minus 279 million for 24, so it seems a bit high, and with their current debt load, uh, I just see how you see their financing needs. If you see the cash burn uh, potentially reducing and turning it to a positive operation cash flow. If you see this as a business that's always going to carry a high amount of debt. So I'm just wondering your thoughts a bit there, a bit more on the balance sheet of the business and their cash flows.
Well, I mean, it wouldn't be a great 100 bagger opportunity if it wasn't really cheap. And it
Yeah,
wouldn't be really cheap if there weren't a lot of reasons for questions about
mhm,
it's the viability of the business
yeah,
model. I mean, basically, like that's what happened with Carvana. Like it was sort of priced as if it was going bankrupt. I remember like for the first year after, it hit that low of 350 Carvana, I'd sometimes go on these business shows and they pair you up with like a Wall Street analyst, right? And usually I was the bull for Carvana, and then they'd
Okay.
have the guy throwing cold water on the business model, saying, why I was going to fail. And I was on with some guy, I forget where he was from, Wedbush or one of those places. It wasn't Dan Ives, it was somebody else.
Mhm.
And he had like at the time, I mean, maybe the price of Carvana must have been like $30 or 25 or $30 or something. And he had just raised his price target to 20.
Okay.
And um and I was like, we were on the commercial break before, and I was like, how did you come up with this? Like, um target, did you basically like you had like sort of like, oh, assuming that they stay alive and they succeed, like going forward, you put, you built, basically you model out $30 as your kind of 1 year price target.
Mhm.
And then if you have the and then you have this other case where they go bankrupt, in which case
Okay.
they're kind of zero, and you sort of like cut it down the middle or something
Mhm.
like that. And he's like, yeah, that's basically what we did.
Wow.
And so, it's if you, like, for a lot of these businesses, there aren't a lot that come back from the dead. That's one. So you have to be mindful of that and cautious.
Hmm.
But obviously, like when they do come back, like in Carvana's case in December of 2022, when it was 350. If we pulled up their rear view looking financials, like whatever, like things you're talking about, like
Hmm.
operating cash flow, or for the prior year, I mean, they obviously look horrible.
Hmm.
And so they always look horrible. And so the stock price usually um, hits bottom and starts to move up, you know, several months before there is any proof of a viable turnaround in the business, because you have to see the turnaround has to happen in real time.
Hmm.
Then it has to get reported in that quarter. Then 6 weeks later, they report that quarter and they talk about it. And then people react to that quarter after that. So there's always people. There were people when I was bullish on Carvana, and there are like tons of people now about Opendoor saying, how can you say that? Like, I'll wait. Thanks very
Yeah.
much, but I'm going to sit back and wait. And those people have been right up until now. And I was wrong. I was on like the Josh Brown podcast in June of 2022, where they were wanting to know like two tech companies that I thought were going to come back from the dead, at that time, because that's when
Hmm.
all of tech was melting down. And as highlighted Carvana and Opendoor. So that was 3 years ago. So I've been wrong for 3 years, and being early is still being wrong.
Yeah.
And so I can understand why people say, "Oh, I'll sit back and wait." I want to see the proof. Because I don't want to be early or whatever. That's fine. That's up to you. But I'm just saying, like, I think what we're going to see is that 50 cent mark was the low point.
Hmm.
Probably like 6 months from now, like we'll see some, more tangible evidence of sort of steady state profitability. They've already kind of hinted that the quarter that they're going to report next week is going to be their first EBITDA positive quarter in 3 years. So, and then the Bears will say, well, it's just one quarter. I'm going to sit back and wait for 2 quarters, or I'm going to sit back and wait for 3 quarters or 4 quarters, or whatever they want to say. Or they'll say like that's a seasonally strong quarter for them, and now we're going into two seasonally weak quarters for Opendoor, where not as many people buy sell homes in the winter versus the summer and stuff. So they'll be challenged to show that kind of durable profitability during those months, and they might be right, but I think we're gonna see that they've cut to the bone, and um, even in this uh, difficult macro Powell high interest rate environment, they're able to eke out, like a profit. And then if we get a little bit of support from cuts, which I expect. I mean, I don't expect massive. We're not going back to zero interest rates,
Yeah.
fortunately for the for the stock, but we are going back to like this easing. Just a little bit of easing from a macro perspective will lead to a flood of volumes for Opendoor, which hopefully they can make a little bit of money on a unit economic basis for each house, more than they have been historically, and that will surprise Wall Street. And this is all going to be about the road to 82 is all going to be about beating expectations,
Mhm.
not proving a stellar financial record in the next
Mhm.
quarter and the quarter after that. I mean, on an absolute basis, it's all relative basis to whatever the expectations are. And fortunately, like when you get a stock that's 50 cents or 70 cents or 80 cents or even now $2, there's not a lot of hope
Yeah.
attached to it. So expectations should be easy to beat if management is competent, which is
Okay.
still in.
That makes sense, and I agree with you on those points. And I mean, a lot of the companies I've bought in the past, their financial situations looked very messy,
Yeah,
but they managed to turn it around. Like even Nebius, if you look at
right.
if you look at their earnings reports, you're going to see a lot of red flags if that's all you care about, right? They're not profitable. They're burning a lot of money. They don't have enough money to do all the expansion plans they want to do in the future. So they will have to raise either money through equity or debt, either one of the two. They have raised some money through equity in the past few months. Uh, so even in a company like that, which I really love, obviously, if you look now back at the past 2 quarters, it's not a balance sheet that you're going to fall in love with. It's not a cash flow situation you're going to fall in love with, but it's all about the future, right? Even with Palantir, back then when it was $7, there was a lot of dilution happening. They were just still losing money. People were saying they're never going to be profitable. And look at them now, for example. So obviously,
And they were saying it was still expensive then. I mean,
yeah,
everybody's always complained about the high price to sales multiple on Palantir, even when it was $6,
true,
let
true,
alone
true,
whatever
true.
it is now, 140 or whatever it is.
Now it's crazy. I mean, if you look at any valuation metric on Palantir, it's just mind blowing that it has sustained it and grown. It hit an all-time high of $160 just a few minutes ago.
Mhm.
Um, so I thought it's not gonna go over 120, and I sold. But look at it, just go. I mean, people are in love with them.
Mhm.
So hopefully we can see a similar story play out with Opendoor. Obviously, a lot depends now on rates going lower, which in my personal opinion is that we will see rates going lower because even with tariffs, yes, they might be inflationary, but we have other very stubborn sectors in the inflation reports that are starting to roll over, such as shelter, insurance, which had been very stubborn and raising inflation in the past few years. They're starting to roll over. So I think those will balance out with the things tariffs will increase. So I don't think we're going to see any spikes in inflation. And if anything, those are going to be more of a one-off if we do see them. So I think inflation will keep going lower and we will see eventually Powell also taking rates lower. I hope he doesn't get fired because that's going to be a different situation with the Fed losing credibility if that happens, but it doesn't seem it's going to happen. Trump is just going to wait for his term to end. Um, but now the other question is, you said, and as the company has said, they expect to be EBITDA profitable for the first time now. The question now is, how do they turn that into profitability on a gap basis in the next few years? Because again, I mean, margins are low. They have synergies now with also the escrow services and everything else they're offering. But in general, the real estate market is a very low margin business. And when we have a very capital intensive business like Opendoor compared with very low margins, it's something that's very hard to turn into profitability on a gap basis. So what are the steps you want to see them make in the next few years to potentially turn the business into a gap profitable business?
Well, fortunately, I don't think they're going to be judged on a gap profitability basis anytime
Okay.
soon. These are Carvana and Opendoor have always, lost money. Carvana ran itself prior to the crash in its stock price for as a growth company, and they
Mhm.
were rewarded by Wall Street for being a growth company. They were encouraged to do that. They were encouraged to lose money and to, build out this national platforms, build the bubblegum
Mhm.
machines where the cars come out and all this kind of stuff. Um, and then they had to pivot. So But they're, and then they almost died, and then, they've been building back up. But even now, I mean, they're not really judged on a
Mm-hmm.
GAAP profitability basis, even at $400. So I think that's still, years away in terms of, and that's part of that expectations,
Okay.
outperforming expectations. So I think for Carvana, the real thing that people looked at was gross profit and how they did on, and then gross profit on a per unit basis. Um, Now, and there's differences in the buying a $20,000 car and the gross profit that you can eke out on that sale
Mm-hmm.
versus buying a $350,000 home and the gross profit that Opendoor can eke out on that sale. So Opendoor's gross margins have always been lower structurally than Carvana's, and that's important to understand. And it's also important to understand, like, the way that Carvana has sort of come back has been from something called F&I, finance and insurance. So they don't make money from the selling of the car
Mm-hmm.
itself. They make the bulk of their gross profit from the finance and insurance aspect of that sale. And then if they can sell on extended warranties and things like that, there's these ancillary services where the real margin is for Carvana. And that's the magic. And so if you look at Opendoor now, just doing iBuying is not a great business model in and of itself. I think if you want to attach some services to that, like, hey, we'll go in, we'll fix up this, you pay us, seller or buyer, and we'll go in with our crack team and fix up this dilapidated house that
Mm-hmm.
you're buying for whatever the price is, and you pay us this extra, services fee. There's things like that they can do.
Mm-hmm.
There's they can leverage AI, like I was saying before, to be better at the buying and selling, price, so they don't get themselves into the fix that they got themselves into in
Mm-hmm.
2021 with having too much inventory that then led to that Q4 or whatever it was, Q2 22, selling whatever the percentage was that you quoted, like they were losing money
Mm-hmm.
on. Um, AI will help with that. I think the big opportunity is, the similar um, business to F&I for Carvana for Opendoor
Okay.
is mortgage and title insurance.
Okay.
There's a reason why mortgage and title insurance there's at least two guys who own NBA teams. This is a high margin business, mortgage and title. Okay. So, like, you said you own Rocket. So, like, Dan
Yeah.
Dan Gilbert owns the Cavs, and whatever the guy's name from Michigan State who owns the Phoenix Suns, Matt Ishbia.
Mm-hmm.
So that this is their bread and butter, and this is sort of like the margin is in the mystery, like where, like, people just don't realize they're paying so much when they buy a car, what they're paying for the
Yeah.
financing and insurance, and they don't realize on the mortgage and title side too. So that's the piece. So if you sort of think about, like, where Opendoor is today and where they could be in a couple of years with like, and the other area that they are also doing now is they're trying to kind of push out an asset light kind of marketplace approach where instead of them only iBuying, you know, use us. If you're an agent,
Yeah.
use us, Opendoor, to, as sort of like, if you want to show your client, like you can sell your house today, George, because Opendoor is going to pay you X right now. Or we can keep going, and I will continue to try to sell your house
Mm-hmm.
in suburban Athens. And so, and you pay me my full 6%. If you take the open door offer, me the agent, I'll be happy to kind of get the sale, and I'm quite willing to kind of lend, part of my fee to Open Door for them closing quickly.
Mm-hmm.
So they don't have to, Open Door does nothing, except provide the price, execute, and they get that extra fee. So it's sort of like the Amazon marketplaces kind of approach where asset light, just bringing in new gross profit that way. So we're talking about mortgage and title, marketplace, services, better
Mm-hmm.
pricing through AI. You do all those things. I think this business is like a 20% gross margin business instead of whatever, low single digit
Yeah, we're
gross
at
margin business, or
8%,
they
I think. now.
Yeah, or they were losing money. At their
Hmm.
low point, at Carvana's low point, I think their gross margins were something like 4% in their worst quarter in 2022, versus I think Opendoor's that was the same quarter, and I think there was like -7% gross
Okay.
margins that particular quarter. So there are differences, but there are steps that they can
Hmm.
take to prove that over the next couple of years. Now, again, like I think that's the question mark hanging over Carrie's head on the call on Tuesday. She should articulate all these levers that they can push. Has nothing to do with Jerome Powell. If Jerome Powell cuts rates, great. That's icing on the cake. But all open door management can do and all the board can do is just basically pull the levers that are within their control. And there are levers to pull, and they can
Yeah.
make this a much more profitable and valuable business. So that's what I'm looking for to see whether Carrie
Hmm.
grasps all those levers, or she is just more of a like the critique against her, and it's articulated most by like Keith Raboy, who was the kind of wrote the original business plan and was sort of like one of the co-founders, is that she's a finance person. She doesn't get it. She's just a bean counter. She's just like kind of looking at kind of cleaning
Hmm.
up and doesn't sort of grasp these more whatever strategic aspects of building out the business model. So we'll see. Tuesday is going to be her chance to shine or not.
Let's see what they have to say. Definitely a lot of improvements in the business model over the past few years. I think I'll call this like iBuying 2.0, which is this new model with all those synergies attached. And I think with what they announced, was it this week or last week, the Cash Plus one? I think that's the iBuying 2.0 of what I call it. Definitely seems that with this model that they're putting out now, they've learned from a lot of their mistakes in the past. One of them being, for example, as you said, agents. Agents now use Opendoor as a partner instead of them just being a pure competitor to them, because that's what Opendoor used to be. But I think now that's very helpful too. Obviously, low inventory is really going to help their financial situation. And as we said, lower inventory cycles, that's really also going to help the business model. But now, since we talked about Kari and the management, I was really wondering, have they reached out to you at all since you started covering the company? Because basically, you are the catalyst right now that the stock experienced in order to prevent the stock split that was about to happen, and that's massive for the company. And a big green flag that they extended the date. They didn't completely cancel it, but still, I don't think they're going to go through with the reverse stock split. So I was wondering, have they reached out to you at all to perhaps ask you questions, and you asking them questions? Because if I had a company that was about to, get delisted and needed a reverse stock split to stay compliant, and then some guy comes out and just basically removes this threat from the way because he started covering the company and has brought a lot of people into it. I would be very interesting to approach them and talk to them. So I'm just wondering, has the management at all reached out? Are they paying attention to what's happening? Because winning the retail crowd over, which they could do right now, could at least help them keep the stock price afloat until they start proving this. Because obviously institutions need proof that they're always slower most of the times in entering, and they need the proof that things are turning around. So until then, the retail can definitely keep the stock in a territory where no split or anything like that would be needed. So that's why I'm very curious if they have at all tried to reach out to you.
Nobody on management has reached out. I was DM'd by Adam Bain, who's on the board and who
Okay.
I've met in the past and I was connected with on
Mhm.
X. And um, uh, no, he's the only guy who has reached out, but it wasn't really like a substantive exchange of information.
Okay.
It was more of like, hey, wow, can't believe you're doing this. Woo, boy, the stock's moving or something, that kind of thing. And it
Hmm.
was like, you know, um, uh, me sort of saying like, by the way, this isn't BS. Like I really believe like this this company is really undervalued. It should be worth a lot more. I hope like by August this thing is like more than $8 or something like that. And and he said something like, oh, look, we were in a quiet period now. Let's talk, you know, after
Yeah,
earnings
obviously. Yeah.
next week or whatever. And and then but nobody from management has. I don't know if I buy that, to be honest, George. Like, I mean, like I've dealt with I don't generally do activist campaigns, and I don't
Hmm.
consider this an activist campaign against Opendoor, but I did one 20 years ago with Yahoo,
Okay.
and what I noticed from that experience of going through that is that when company management and the company board, perceive you as a threat as for like on an outside and might be coming for their jobs. They close ranks, they shut up, they don't like to communicate, or if they do
Hmm.
communicate with you, it's a very like orchestrated, kind of discussion, and they give very little, or they, try to anyway. And all because they think that you're calling for their heads. And so my guess is that Carrie thinks I'm a threat to her, and
Okay.
that I will be coming for her head, and that's why she hasn't reached out. But I agree with you. I think it's a totally missed opportunity that
Hmm.
she hasn't at least come out publicly to kind
Yeah.
of just talk more about the company and talk about like what her belief in the company, and it's totally separate from whatever it is I'm saying or my
Yeah.
views or whatever. I think obviously there's been a lot more attention on the company in these
Exactly.
last few weeks, and so I don't, she's not even on X. I mean,
Exactly. Yeah.
like X has been around for 20 years. I mean, like, how can you be a CEO of a tech company
I know.
and
Be
not
not.
be on
Yeah.
X? Like, it's kind of bizarre to me, anyway. So I couldn't even like tweet at her or say, "Hey, Carrie,"
Yeah.
blah blah blah. So I just have to send these like cryptic messages. Carrie, somebody from Bloomberg, t sent me a message saying, "Hey, I assume you're like talking to management all the time. Like, would you come on the show and you and Carrie and do I don't know, like I assume it's like bull, sort of like a debate, like they always like to have on TV." And I was like, "Well, I'd love to. I had no contact with her. I had no, you probably have a better chance of getting a hold of her than me." And so that's just the way it is. So I just think that's that definitely. I don't know. It gives me pause. Like
Yeah.
when I came out and I said IREN and Cipher were the next Carvana, and
Hmm.
they could had a chance each to 100x from the levels where I had bought them within like 3 days. Like the two CEOs of those companies friended me or whatever you call it on X,
Hmm.
and then, sent me direct messages like, hey, saw that you mentioned the company. Thanks a lot, kind of thing. It was like just a totally different reaction,
Yeah.
versus silence from Carrie. So,
And especially for how much you've done for the stock price and for the company, like preventing a reverse stock split, basically, which is a huge thing. I would expect someone to reach out to you, and yeah, it is a big opportunity. A lot of eyes are on the company, so they should start speaking a bit. And
well, yeah, and I've never heard Elon Musk say, "Oh, I can't comment now on Tesla. I'm in a quiet period." I
yeah,
just
he always
he
comes
just
out.
fires away,
Yeah,
like that's and that's I'm not saying like she has to be exactly like Elon Musk, but I just think it's a cover your ass kind of
yeah,
thing comment to say when you're it's a quiet period. Like it's just it's an excuse to not to have to comment, to not to have to
yeah.
engage, not to have
We'll
to
see.
communicate.
Maybe let's hope after the earnings report that they actually start commenting. I mean, as you said, not having an X, being a tech CEO at this date and time, I think is very odd. And I mean, you're missing on opportunities right like this because there's a lot of people right now looking at the company and still having questions. And she could be out there basically talking about the company, answering all these questions, promoting confidence, talking about the next steps they're doing to turn the business around, describing basically they announced the cash plus. She could have talked about that a lot in detail and how it could potentially help the business and turn it around. But yeah, there's I'm very surprised to hear that nobody from management has reached out. I find that a bit disappointing. hopefully they reach out after the
I
earnings
mean, I've had a
call.
lot of I've had a lot of ex-employees reach out, and they've, they're, yeah, keep going, we're with you, and I couldn't have said it better myself, and all that kind of stuff. And
Okay.
I have heard from those people like, oh yeah, everybody in management still like reads all of your tweets all day long, like they're fixated on it. So I don't know if that's true or not, but that's what
Might
I've heard.
be. I mean, I think they figured out why the stock has reacted like this in the past few weeks, and I mean, uh, hopefully they have figured it out. I mean, because you're all over the major news channels now with articles that you have basically helped the stock move much
I,
higher. They're calling it a
I think.
meme stock. I don't think it is, to be honest.
Yeah, no, I mean, and let's talk about the meme stuff, but I just want to you made me think of one point I wanted to
Hmm.
express, George, which is that, we were talking about retail and, the power that retail can have, the power that they can exert. And I mean, I had this vision like 20 years ago when I did the first Yahoo campaign, where I was just like a retail investor myself, trying to, basically put my ideas out there on social media, blogs and wikis at the time, YouTube videos and Facebook groups and all this kind of stuff that nobody had ever leveraged before. And my goal was, hey, if I put these ideas out there, there's going to be other similarly frustrated shareholders like me. And even if each of us is very small, we put ourselves together, we become this like massive voice. And we have the same effect that a Bill Ackman would or a Carl
Hmm.
Icahn would, with his whatever $4 billion hedge fund or something, taking a big position in the company and then lobbying for change. And that didn't really happen. Yahoo continued to kind of bump along, and they turned down the Microsoft offer, and then they, even after the so-called expert Wall Street activists got involved, what did they do? They hired Marissa Mayer, which was a disaster. And so it was, anyway, my vision for Yahoo didn't work out, but what I think is really interesting about this whole Opendoor episode is that I've met some like brilliant people, uh, you know, uh, some on the outside of Opendoor,
Hmm.
who are just investors who follow the company and have really um, um, interesting perspectives and suggestions. And then obviously, like the people who have been on the inside before, they have a wealth of knowledge about whatever their area of expertise was that they were dealing with at the company. And when you start to hive mind and you put all these ideas together, and then you have a way of expressing it, like obviously anybody could express it. Like
Hmm.
there was this guy who I met who wrote a Wall Street Bets post in May, I believe, about how Carvana was a 100x opportunity. And he wrote about like many of these kinds of things that we're talking about here today. I never read it until, after I had done my own tweet thread about it. And then, a couple days later, somebody tweeted at me saying, oh, you should read this Wall Street Bets post because they kind of agree the same thing. So the guy is he's known as Greg. Yeah,
Okay.
I've interacted with him on there's like a Discord, a date open door or data door, it's called Discord server,
Okay.
where he participates. I don't know who he is, how old he is, where he lives, what he does, but he's obviously a very smart guy, and he wrote these great ideas. And so um, those have been kind of morphed into things I'm talking about. But initially, like that didn't get attention. Like the stock kept bumping around for whatever reason. Since I started talking, it's put its focus on it, and it's sort
Hmm.
of attracted like a bigger following and so forth. And then as the following grows, more people are obviously always feeding me ideas. Some of them are harebrained, and some of them are really, really smart. And hopefully, like we're kind of pooling them. And I get this opportunity through Twitter or X to kind of put them out there to the world. And maybe they're wrong, maybe they're not good ideas, but I do believe that like once you put a good idea out in the world, it's pretty hard for even an intransigent management team to kind of put its head in the sand and ignore it
Yeah.
or to poo-poo it, especially when it's one that has almost died and was trading at 50 cents a few
Yeah.
weeks ago. It will really be telling if they don't try to scoop up every good idea that's sort of flowing their way as fast as they can. So in a way, we're kind of like we're doing this in real time here, in as we go, making it up. But we're effectively trying to do a retail social activist um, taking control of the wheel of this company, in a sense.
Yeah,
We're trying to
every
say,
time.
this is exactly what you should do, management. And if you're not doing it, you're a fool. And, we're going to come after you, presumably at some point, and we're going to find
Mhm.
somebody else who can do this. Because a good idea is a good idea is a good
Yeah,
idea. And who is not in favor of $82 a share as a goal
exactly.
for this stock price? So it's and we're not like some Wall Street, activist firm where we're coming in here for like, hey, this thing was cheap at 50 cents. Let's sell it for $2. Get somebody to swoop in and buy this, and then they can,
Yeah,
unlock the value to take it to 82, but it'll be a little private division within that larger entity that nobody on the outside, public shareholders, will be able to participate in. Yeah, but we'll have juiced the stock from 50 cents to a
yeah,
buck 50, and we'll look like heroes for 1 month to our LPs, because of that return. Like that's not what this is about. This is about getting it for everyone's benefit, whoever is a shareholder and who believes and who buys in to get this thing to $82. And it's going to take time. It's going to take years.
yeah.
It's not going to be next month or next quarter or, 6 months from now.
No, I completely agree. And I mean, hopefully the management starts paying attention and capitalizes on this opportunity, because I was going through comments on your post about Opendoor, and yes, there are some great ideas. There's some people that are pointing out a lot of the negative facts about the business and how perhaps they could change some things. There's some great ideas going around, and I hope they notice how much power the retail crowd has and try to capitalize on it. For example, you saw uh, Palantir back in the day. Uh, One of the reasons a lot of retail fell in love with them is because they noticed the retail crowd and they started catering a lot of what they do, and especially about how they present things for the retail crowd. For example, at some point they started using some of the most popular people covering the stock on X for earnings calls, for questions, for hosting their events.
Right. Oh yeah.
So
You're
they
right.
really
Yeah, I
hugged
forgot
the
about that.
yeah, they really hugged the
Yeah.
retail crowd and embraced it. And even Carp at every presentation, every earnings call, was talking directly to the retail crowd at times and thanking them. And so they really embraced this opportunity. And I think that's why
Mhm.
the retail has really, really, really stuck with Palantir. Even with IREN, with Cipher, they're very active on social media. They're doing podcasts. They're replying to comments. Dan Roberts, for example, is also I always see him on X and replying and talking to people. So they're definitely capitalizing on this opportunity. So we hopefully see Opendoor doing it too. So and I don't think there's a meme. This is a meme stock, because if executed well, what they're about to do in the next few years with their new models, it can lead to unlocking massive value. But that's the thing. It needs to be executed well, because there's a lot of moving parts. Oh my God, your dog is so cute. I love dogs.
Yeah. Now I gotta give this is Ruby. So she was in the photo in the Bloomberg article a couple of weeks ago. So
Okay.
she's just got back from a walk. So everybody
Hello.
seems to like Ruby and Teddy. I got Teddy here too, but it's hard to get both of them on my lap at the
Yeah.
same time. So she's always looking for Pat. So I thought I'd introduce her to your audience, George.
No, I love dog, and no, my audience loves dog, because every time I used to stream back in the day, and my dog used to come into the frame, and now they're all asking, "Where is Boris? Where is Boris?" Which, now that I'm saying all everyone says, I've never had people ask me to do a thesis on a stock as much as I've had questions about as Opendoor in the past 2 3 weeks. It's crazy.
Yeah,
Everybody keeps asking me, "Can you write a thesis? Do you like this stock? Are you gonna buy this
yeah.
stock? What are you?"
Yeah,
And
it's funny. It's funny.
yeah,
Like yesterday I came out and I disclosed like on Twitter that I had this long position in Upstart, UPST, which I think is a fantastic investment opportunity.
mhm.
I think it's a 15 bagger, by 2028.
It's a good
So it's not
company.
not a 100 bagger, but none of us is going to be unhappy with a 15 bagger in our
I think
portfolio.
everybody should be happy with that return. Yeah.
Um, But it's still early. Like what I noticed with Opendoor is like you put it out there day one, like I tweeted it at like 2 p.m. I think the stock finished flat that day from where when I tweeted about it. I think the next 2 days, it went up, I don't know, a little bit, maybe a little bit every day. And then suddenly a weekend happened, and then suddenly on the Monday, it was a huge day. And then the Tuesday was the day that it traded like 2 billion shares and
Yeah,
it
it was crazy.
halted the NASDAQ for like 13 minutes at the end of the day. And it almost hit $5.
Yeah, it was
So,
crazy.
um, anyway, it's like these things kind of like build and build. And like,
Hmm.
as days goes on, more people kind of hear about it or see it or talk about it. But, and so that might happen with Upstart. So, I don't want to prejudge it, but it does seem like, yeah, there's something like special about Opendoor, like that seems to captivate a lot of people's interest. And I wouldn't have been able to tell you before the fact that it was. I mean, I was never thinking about it as a meme stock. And then like 2 days later or 3 days later, after I tweet out about it, people, here we are, we're back to the meme stock craze, and think like as if like I was like some puppet master, like deciding, what I'm gonna do this week. I'm gonna control the markets, and I'm gonna wave my magic wand and make Opendoor and Kohl's and GoPro or whatever it was,
Hmm.
like these meme stocks. It's sometimes it's bigger than all of us.
Yeah.
And for
And you
whatever
couldn't have
whatever
known, right?
reason,
You
yeah.
couldn't, it's not like you've done it in the past and you've sent the
Hmm.
stock skyrocketing because of your tweets.
Hmm.
Obviously, you put attention on BTQ, and that took a lot of time
Oh
still
yeah.
start picking up. And then obviously, because they kept executing, a lot of news was coming out. A lot of people caught up to the story and started buying it. But it's not like you've, let's say, pumped a stock in the past, so you knew that you had this power, which obviously you know now with smaller companies. And obviously, look, Opendoor did meet some of the criteria of the memes. Looks like high short interest, cheap, very cheap stock. But it's an actual business compared to all the other meme stocks. It's an
Yeah.
actual business that can turn around, and there's a lot of catalysts in the future that could turn this business around. Like as I said, I didn't like their business model until they actually announced this cash plus thing. I think that solves so many of the flaws of the previous iBuying model.
Right.
So it already seems that sure the management is still making mistakes, like for example, not capitalizing right now on this opportunity of all the attention that's put on the company. Uh, but also we can see that they are learning from previous mistakes, and are willing to make changes. For example, they didn't used to have sell signs on their homes. They do have everything now. They do everything perfectly. And they seem to figure out why the first iBuying model didn't work, which also, as you said, Zillow, Redfin, they also failed and stopped it. But instead of, they failed at that too. But instead of stopping, it seems they try to learn from their mistakes, saw what they can do differently and better. I think they obviously had to hear a lot about complaints from agents and other people why they didn't see this model working, and they just announced something that I think, if executed correctly, could unlock a lot of value. And then there's the other side that I hadn't thought, which is the data, which you
Well,
said.
they also, I mean, Redfin and Zillow also, they had their core business. So they got
Yeah.
into iBuying as sort of an adjacent business.
Hmm.
And so like whereas Opendoor started as an iBuying
Yeah.
business, right? So like it was a burn the boats kind of a decision for them. Like they were sort of stuck with iBuying. They couldn't get out of it in 2022 when times were tough and go back retreat to some other profitable business. They had none. I mean, it's kind of like my own story with my hedge fund, and like basically like having a terrible 21, 22, having like my major investor pull out, and like sitting there like with nothing, basically, except my brain, like, and like all these smart advisors saying like, oh yeah, you should just like sell, close down your business and like start in 6 months, and then you don't have to show your bad track record and stuff like this. And that's a tricky way of kind of getting around that. And like I just didn't. I mean, but I didn't want to, and I didn't. I just so like. there was no other course but just to keep trudging on
Hmm.
and kind of figure it out. And that's what Opendoor had to do. Like, so all these others could just, it was an easy off ramp for them,
Yeah,
like to say like, this business doesn't work. This can't work, can't ever work. And now that rhetoric infiltrates the heads of like all these investors out there, right? Oh,
exactly.
they,
Yeah,
they said it can't work. Oh, it can't work. Oh, iBuying can't work. Oh, and so like we're all like this is something I've been tweeting about on in this whole Carvana thing is like we're all prisoners of the moment. Like we are not, I think as humans, our inherent bias is just to like however whatever pain we're feeling now, we just have to assume it's going to feel like this forever. Like
yeah,
we just
true.
can't sort of lift our heads out of the gopher hole, and look down on the horizon and see, well, if this happens and that happens and this happens, this thing could be slightly different. So,
Hmm.
I mean that's what was needed for Carvana, and I think that's what's needed here.
Okay. Well, to be honest, I really like what I hear. My only remaining question mark is the same you have, which is management.
Hmm.
For example, as I said, I would have hoped that they would have reached out. I mean, that's what I would have personally done if this opportunity has come and someone saved my company from a reverse stock split, which would have been
Like if
disastrous.
you wanted to be if you, like I wouldn't do this, but if you wanted to be really tricky and you were like really like kind of devious, like Game of Thronesy, and you're on the management or the board, what I would if something like this happened to me, I would like say, go, talk to Eric, go meet him, whatever, slap him on the back, flatter him,
Yeah,
tell him he's so brilliant, and then say, why don't you come on the board? And
yeah,
we'll give you this great compensation package. We'll pay you this in stock. We'll pay all these RSUs because you believe in 82. Well, imagine what these puppies will be worth if we get to $82 a share, and you can make it happen on the inside. You'll be inside the velvet
yeah,
rope and all
yeah,
this kind of stuff. But what the devious part about that is they would immediately shut me up, and
yeah. That's
no
true.
longer would they
You
wouldn't have
couldn't
this
talk about it.
the guy wouldn't be on the outside throwing stones saying, "What the hell? Why isn't Kerry talking?
Yeah.
What is Adam Bain doing?" and all this kind of stuff. So that would be like the sneaky thing to do, like this, and probably the smart thing to do.
Hmm.
But no, hasn't
They've
crossed
done
their mind.
nothing.
They haven't approached me yet, and now I've sort of said that like, I'm not going to be open to that. So if I don't think they will now because I'll probably tell everybody that
Which
they
is
tried.
good because we need your opinions on this and your analysis, and we need to keep you focused
I mean,
on the.
ultimately, that's not going to get this thing to $82. If
No,
this is like if this is a flawed management team and board, and they're not taking the right levers, like why would I want to be a part of that? Like what,
exactly. Yeah.
because that's not going to get it to $82. I'm going to want to kind of advocate for this, if they can, if they see the light, Tuesday they Carrie steps up and she says, we're going to do this in AI and we're going to do this and, for all these ancillary services and we got this plan for cash plus and all this kind of stuff and we're doing this in our asset light model and it all makes sense. Great. I'll be leading the parade down Main Street, saying how wonderful she is. But if she doesn't step up and it is hard. Like I remember George, like a long time ago, 25 years ago, I studied in my doctoral thesis. Like I got a friggin' PhD in studying the effects of management team member backgrounds and
Okay.
director
Wow. Yeah.
backgrounds on their company's IPO operating performance and value, and then post IPO operating performance and value. And what you realize is that it sounds kind of simplistic, but if you grow up and your career is always in finance, you see the world in a financial way. If you come up as a director of engineering, you're going to see the world in that way. If you come up as a salesperson, like Ballmer, you're going to kind of see the world in that way. And so it's no function is inherently bad or good. I mean, I think Keith Rabois thinks like it's impossible for a CFO to ever be a good
Hmm.
CEO. I don't have any good examples off the top of my head to give, but I don't know that I would go as far as Keith in saying that. There probably are some good examples, but people see the world in a certain way. Tim Cook was an operations person, right?
Yeah.
And for better for and Steve Jobs thought he would be the best successor for him. And you could, I think it's a fair argument to say he was right. Like that's the operations, the unlock of the operations since Steve Jobs died has been critical to the value creation at Apple.
Hmm.
But, it's also led to the virtual reality headset and the AirPod speakers, at-home
Hmm.
speakers or whatever they call those things, the duds. That
Yeah.
that sort of like you get that, you take the good and the bad with those
And he's getting
choices.
some heat now,
Yeah.
because everybody's saying that they're behind on AI. But I
Mhm.
mean, again, as you said, he's an operations person. He's not an innovator
Right.
like
So
Steve
Carrie's a
Jobs.
finance person.
And Carrie's,
So
yeah,
is Carrie going to do the things that you just talked about Carp doing, cultivating that retail crowd,
it doesn't seem.
and making that. I don't think that's in her bailiwick, to be honest. Like if that's my guess. I mean, we shouldn't prejudge. Maybe she'll blow us out of the water and she'll step up to the plate
That
and
would be
do that.
amazing. But
But I would say, like, given her background, given where she's been, what she's done, probably that's she's probably not going to be as effective
mhm.
as a carp. So, and now it's hard to dial up, another carp to step in. I don't know
Yeah.
who exactly that would be, but but that's if central casting Hollywood, I mean, that's the type of person that you need to run this company.
No, I completely agree. And for example, in some private investments now that we're trying to raise money from a fund, um, I'm talking to a few, as you said, I call them two bean counters, which they lack the vision.
Right.
They're all about the numbers, but they lack the vision. And that is very problematic. And we decided that we don't want to work with that fund because we don't align on anything because they only care about the numbers right now. They have no vision. They don't see where this can go. They don't see what we can create, and there's no point in working with them. But you need someone, especially leading a company like Opendoor, to one, have the vision of where this thing can go, which is very important, and two, you need to be very open-minded, which a lot of finance people are not very open-minded. They're just stuck to the facts and that's it and nothing else. Um, you need someone that's more open-minded to new ideas, to embrace new ideas, uh, to communicate those ideas with the investors and people that are not investors but are questioning the company. And I think nowadays, especially the communication part is very, very, very important. Like we've even seen earnings calls go from like a lot of companies right now are doing live stream earnings calls. Like we saw Robinhood yesterday, which they even had a live audience and their earnings call because they also they tailor their platform to mostly retail investors and they've understood the power of retail and have also embraced the retail investor and this crowd a lot. And a lot of it has to do with how they communicate things. And I think not having an X account on and being a CEO of a tech company when you need to communicate with people in the crowd what you're doing, how you're going to turn things around, what changes you're implementing, if someone has a good idea or potentially have a very, very good debate with someone on X. We see it all the time. CEOs having debates with people, and a lot of the times they're very constructive debates, and you can get a lot. That's the type of person you need right now leading the company. And let's hope that the quiet period is not just an excuse, and they're not going to talk about it. Uh, so let's hope after the earnings they actually come out and they start communicating, they start embracing everything that's happening. Because as I said, they've implemented some nice ideas. I think explaining right now to the crowd how these changes they've made can move the business forward, addressing a bit of the past and what they've learned of the past. And perhaps there's, as I said, there's a lot of people when they want to invest in a company, especially um, retail that just came out of university, studied finance, studied whatever, they're all about the numbers, right? And if you just take a look right now at Opendoor's numbers, it's a pretty bad picture. But as you said, that's a past, and we need to distinguish the past from the future. And I think that's something that management also needs to start communicating that yes, our past has been very, very rocky, that it wasn't, we don't have the best numbers right now because again, we made mistakes in the past, but look, we're doing this, this, and this that are going to change the way the business is running. For example, lower inventory times, talking a bit about that, how that can impact the balance sheet, because that can impact a lot, both on cash flow, both on the debt needs. I think talking about those things is very, very important. And again, the question mark right now is, again, as we said, the management team, and if they are able to capitalize on one, the opportunity that you have created by introducing many people that never knew about, I never knew about this company before. For example, I saw you posting about it because I don't live in the States, so we have nothing
Right.
to do with
Mhm.
Opendoor, never interacted with it, never seen it. But and I think there's so many people like me that didn't know about the company that all of a sudden we know about it. We are researching and we're trying to dig through. And having someone tell us, you know what, yes, what you're digging through is what we've done in the past. Look what we're doing now. Look how we're changing the business. Look how we're moving ahead would be very, very helpful. So I was going through all your tweets to see if anybody from the management was replying. And I was like, I can't find anything here. So that's why I asked you, um, which I was
Well,
looking at as a positive. But
the these kinds of situations, they're pretty unusual. Like as I said, like you don't find too many hundred baggers, which is what I'm trying to. I've
yeah,
reoriented
it's
my
there.
hedge fund to be focused on right now. And my big hero, I've never met him. I would love to meet him. Is Masayoshi-san, who runs
Okay.
because I consider him a master at, and I would, I hope to put myself in this category, like over the next, whatever, 10, 20, 30 years. Uh, like he's all about, I'm going to use a baseball analogy, George. I don't know if this is going to make sense to you. Slugging percentage. So
Okay.
there's like this famous, baseball player, Aaron Judge for the Yankees. Slugging percentage is sort of like a metric of, like how many home runs you hit,
Okay.
um, are you there's all different ways that a baseball player could be measured. And is he somebody who technically can do a bunt
Okay.
properly, which is like needed in a very small amount of situations? Is somebody good at singles and doubles? Is there, what's their on base percentage like? Or what's their slugging percentage like? And slugging is sort of like home runs and RBIs and all this kind of stuff. And so
Okay.
Massa was, found Yahoo. Back in the day, he was like kind of the, first big money into Yahoo. He was the first money famously into Alibaba, and then more recently with the Vision Fund,
Hmm.
he at one point he had a huge position in Nvidia, and he talks about how
Yeah,
he
true.
was kind of silly about getting
There's
out
this
of that
famous clip
position.
with
Yeah,
Jensen.
yeah, and so he gets a lot of hate because of WeWork, right? Um, and that was no question a failure. But like I can understand his logic for why he got into WeWork when he got into it, and I think everybody who likes to make fun of him probably is lying to themselves if they don't think they probably wouldn't have been attracted at doing that kind of deal at that kind of time in
No,
that
it
kind of
was, even I
environment.
thought it was like when it began and before we actually started seeing where it's going and how it's going, it seemed like a great idea,
Right.
right? And it was so
And
popular and growing
and it
so
was never
fast.
and it was never a gap profitable business model. I mean, it was
Exactly.
always going to be this low margin,
Yeah.
business, but it was going to be international. It was going to be around the world, right? And so a little bit of gross profit at every location, was going to add up and was going to, tell the
Yeah,
story.
it's
And
all about
so,
volume.
yeah,
And
and
we're
so
seeing.
that's, so like, these kinds of like so Open Door falls in this category. I think Carvana falls in this
Mhm.
category, even though Massa wasn't involved in Carvana. Anyway, like it's I don't know, like it's a very these are very kind of unique situations, and you can't be afraid to fail. But obviously, like I'm going to do every. My mom tweeted me a couple of nights ago, George, that she watched a couple of my interviews, and
I
she
saw
was
that, yeah.
convinced, and she called her. called her stockbroker and told them to buy $5,000 worth of Opendoor. So now, I mean, if I wasn't committed before to all the people on
Yeah.
on X and everything, like now I really got to do everything I can to pull this company up by the scruff of its neck, and make sure that they get to $82 a share one way or the other, for my mother's sake. Okay, so like but it's no guarantee, but I'm going to do everything I can to kind of unlock the value. And
Mhm.
but these situations, they always look pretty messy and ugly at the bottom.
Yeah. Yeah, and that's something people need to understand with if you're looking for a hundred bagger, you're probably looking to a very, very cheap company that's had problems in the past, but they can turn it around, or for some reason the market doesn't like the stock and it's really insanely undervalued or whatever. And usually those companies and those investments are high risk reward, right? But that's the thing. You won't be able to find 100 baggers if, as you said, you're not open to failing because they're very high risk reward plays. Obviously, not all are going to go your way. You're going to be a legend if all go your way, obviously.
Right.
Not all are going to go your way. I've had companies before in the past that I've identified that are going to do so well. Um, and there's no point to do that.
Even if Massa screws up Project Stargate, he's going to go down as a legend just for
Yeah,
one deal, Alibaba, basically.
yeah,
You know, now I think when all is said and done, he's going to have like, a dozen, successful investments to point to. But my point is, like, when you're focused on slugging percentage, I mean, you can be wrong a lot and you still be, you have a couple of wins and you really, ride it. It makes up for all the losses and then some.
exactly. No, even like for example, there's a very famous interview with Roger Federer that says he like out of all the games he's played, the winning percentage of points is like 56% or
Right.
something like that. So it's not like he wins like 90% of the points, 56%. But look what that 56% of winning points where it got him. It got him to be a legend. And in my head, I consider him the best tennis player, but definitely in the top of all history with just that 56% win rate, right? So, and
Yeah,
also,
that reminds me, like we have this little AI team at my company. We have like four guys basically who work for me who are computer
mhm,
science grads, and they've been building AI models for the last 2.5 years, and uh, our performance has been like up and down, very volatile. Like I'm getting a lot of attention now, and people are always like, "Oh, send me your track record." And I'm like, "Oh God," just to warn you, it looks terrible, it looks messy, and all this kind of stuff. And it's also backward looking because we're not doing any of that stuff anymore. Now we're just
yeah,
focused going forward on the 100 baggers. But what? One of the things, like of all, we threw all this spaghetti at the wall over the last 2.5 years and built different kinds of models. But I remember like we would build some models. The best model we ever built, um, in terms of a hit rate that you're talking about, like the Roger Federer,
mhm,
points won was like high 60%. And
okay,
that was phenomenal. But like most of the models we build, like the really good ones, only are like 50, 51% hit rate,
okay,
meaning like profitable trades.
yeah,
But then we would build some models where, it might be low 40s hit rate, but the hit rates of those 40% were the mean return per
yeah,
trade were so large that you could have this fabulous return over time, even at a 40% win rate, because you're making it up on these like big gains on those
mhm,
on those 40%. So there's all different kinds of ways of winning in the market, short-term trades, longer-term trades, so,
mhm,
things with high hit, Roger Federer hit win rates and even lower
mhm.
ones too.
Yeah. Roger Federer is like more like biotech, where you throw all the darts on the wall and you hope one hits the bullseye.
Right.
But which reminds me of venture capital too. Uh, and especially now, venture, by the way, I think a lot of people are saying the whole overall AI is a bubble, which I disagree. And again, we've seen it in this earnings cycle that the numbers are there. We're not talking about a bubble. What I do think may be a bubble is the private equity side of things, because there's a lot of AI startups right now raising. money at billion-dollar valuations, and all of them do the same thing. And like, for example, even at me, because I'm an angel investor, I work with some syndicates, I work with some venture capital firms. The amount of startups that are being sent to us of companies that are doing the exact same thing is crazy, yet their valuations are pure insanity. So I think that's something that could be dangerous, and we're going to see a lot of these companies eventually, blowing up in a bad way in the future. And I think, venture capital, private equity is going to take a hit because we're talking about so much money right now being thrown in anything that has AI into its name. So I think that side is something to definitely monitor and be careful in the future. Regarding public markets, I'm not afraid because, as we said, the performance is there, the numbers are there. If anything, again, regarding compute, regarding AI, I think the estimates are very conservative, and we're going to be mind blown about where this is going. So that's why I've been an IREN energy investor for the past 2 years. I've been in Cipher for a year and a half. More bit like TeraWulf too, which is more on the TeraWulf's a bit different than Iris Energy because they don't want to do GPU hosting. They just want to be a pure play electricity company and just provide electricity to HPC AI data centers. They don't want to go, which is a nice business model too, because you don't have all this depreciation of GPUs and all that stuff. And I like that they're sticking to what they know. All of the management of TeraWulf has always focused on, they were an energy company before mining. Then they realized the best thing for our megawatts right now is to use it for mining. And now they're like, where is the future? Where should we place all our megawatts and all our future capacity? And they're like, HPC AI, that's where the money is. That's where the predictable cash flows and revenue is. So they're transitioning to that. And my personal opinion is we're going to have a shortage on electricity, especially in the United States. I think there's nowhere near enough energy being generated, or that's going to be generated in the next few years to cover the needs of the data centers. And even there was a Meta employee a few days ago that said that the biggest bottleneck right now is energy. And that's why I think also that companies like Iris Energy are going to benefit from that. TeraWulf is going to benefit from that. Utilities, I've been actively telling people to invest into utilities lately because I think they're going to massively benefit from that. Nuclear, which last year around the summer, I was telling people that the only way right now that this big gap that's going to be created in this shortage is going to be covered is nuclear. We can't generate this amount of energy with solar. Solar can fill the gap for a bit, but we're talking about an insane amount of energy. Solar can do it. Hydropower can do it. Natural gas can't do it. Fossil fuels can't meet this demand. It's all going to be, for now, nuclear. And soon we're seeing investments into fusion too, which obviously creates even more power than the nuclear reactors we have right now. So that's also with hydrogen a very, very interesting technology. And even Bloom Energy has kind of blown up lately. That stock because they worked with hydrogen and they had announced a partnership with Oracle. So I think there's a lot into energy. And by the way, leaving Opendoor, I have a question for you regarding Iris Energy and Cipher.
Mhm.
And my question is, why Iris Energy and Cipher and not Nebius? Since I'm a big Nebius guy.
Right.
They like their main part of the business as Nebius GPU hosting, very similar to Iris Energy. So I was just wondering, if you ever took a look at both of them and then decided, what, Iris Energy, I think is the bigger potential for the future.
Well, IREN and Cipher started out from well, obviously both started as Bitcoin miners, but
Mhm.
they chose to move into this whole AI HPC business from sort of like the ground up, literally, where like the buying the land, buying the getting the power connections
Mhm.
at a fixed cost, building the data centers, in like in the case of IREN, buying the Blackwell chips too,
Yeah.
that they can private label. So they've sort of built up from there, thinking that power is going to be this scarce commodity, and
Hmm.
which I believe, and I think you just said you believe. Um,
Yeah.
and I see Nebius and CoreWeave as they sort of came at it more from the middle.
Hmm.
Like so if there's like the irons and the ciphers down here, getting those power, connections and everything, then you have like sort of middleware people in between that are then having the relationships with the hyperscalers on
Hmm.
top. Um, like CoreWeave and Nebius have chose to go about it that way, which has worked for both of them up
Yeah.
till now. But the reason why I like Cipher and IREN is just that their pipeline of
Massive pipeline.
gigawatts coming on stream in the next 12 to 18 months is so large, three gigawatts each, which will be energized, sooner for IREN. I think the full three will get
Yeah.
energized by Cipher by the end of 26. That's going to be like the critical like missing factor for the Metas of the world or the
Hmm.
Oracles of the world trying to get Stargate off the ground and all this kind of
I
stuff.
think so too.
They're
Oracle
going to need to
especially.
do those deals, and so that now you see the core weaves like going down, buying a core scientific to
Yeah.
get access to that
Exactly.
to that to their pipeline of energy. And I don't know Nebius as well. I haven't looked at it as much as CoreWeave, but I believe they're kind of sort of following that playbook as well. And so it's just a personal choice. Like I just think that we're seeing all these sort of
Hmm.
people saying like, oh, energy is a scarce commodity. Oh my God, how are we going to build all these data centers? How do we keep up? And yet we don't really see it reflected, I think, fully or fairly in the prices of the people like um, uh, Iron and Cipher, and probably you would say the same about TeraWulf too.
Yeah.
So I think it's going to change, and
Me
I
too.
think we're going to get to a model where these companies they're not sort of valued on their Bitcoin businesses, although those are important because there's tremendous cash flow that they're throwing off from that. But
Exactly.
they're
Those
going to be, I
prices.
think. I think they're going to be, yeah, and the prices will probably keep going up. So the cash flow will grow even more. But I think that we'll get to a point of like, what's this stock valued at on a megawatt basis? Like,
I think
and
so
how
too.
many megawatts do they have in the pipeline or gigawatts do they have in the pipeline? And then uh, what's the appropriate multiple to assign for that? And I think that's when this like re-rating I think will happen. And I just think it'll be, a big upside for those guys with
Mhm.
these 3 gigawatts in the can, with even more gigawatts potentially to
But
come over the, post 2026.
we just need to see. I think what the market is waiting to see is deals being landed.
Mhm. Yeah.
Um, I, I, I I don't think
Yeah.
either
Because right
me.
now the one big deal out there, the CoreWeave deal for Core Scientific was kind of like highway robbery on the
Yeah,
part of
I think
Core
so.
Scientific shareholders. So it's sort of complicated because you're agreeing to be acquired by a company that breathed life into you because they gave you a $10 billion contract over 10 years on paper, which is the only reason why your stock jumped from
Yeah,
whatever, what, $5 to $15. And now they want to buy you because they want to, and so they want to sort of effectively take that $10 billion deal back. So,
exactly. It's a
and,
weird
and
one.
and it looks low, like on a price per megawatt basis. So it's so then these other peers aren't getting the benefit of that deal, and the deal might even fail. I mean, who knows? Like it could get voted
Hmm.
down by the CoreWeave shareholders, but
They
um,
should.
but I think if Cipher or Iron, tomorrow announce some big deal with Oracle at
That would be
some
huge.
billions over however many years, like wouldn't surprise me to wake up and we see those names like up 70-80% from the day before, and then the whole sector,
So much.
says,
I think
oh,
that's
that's the new multiple we got to use to rate all these companies and everybody. The rising tide affects all the boats.
And the funny thing is that even CoreWeave used to be a Bitcoin miner that went bankrupt and then restructured. So there's a lot of similarities even there. Like you can you can basically see the model working because they restructured, went from mining into GPU hosting completely, loaded up on debt, which I think that's a very bad side of CoreWeave, the amount of debt they have, plus the depreciation on their assets, which are the GPUs. This is a very, very hard thing to, to make it sustainable. So let's see where that goes. That's why I'm not invested into CoreWeave. But I definitely agree with you on that. I think when their megawatts get valued like they should be, because they're priced very cheaply right now due to the Bitcoin mining business, I think they should start getting priced like an Equinix or something like that. Their megawatts. I think that's where we're actually going to see the re-rating. I think getting some deals done, both for Iris Energy, both for Cipher, is going to be the catalyst for people to say, oh, yeah, okay, the story is actually working. Because a lot of people are waiting for proof that they can do it. Because also, we're talking about big capex right now that they
Yeah.
need to in order to get that pipeline created, which is also another question. How will they finance this massive pipeline that they have? Like Iris Energy needs billions of dollars to reach their target, which they don't have right now. And I don't think the stock price also helps them to raise money without diluting a lot to cover this pipeline. So I think a lot of it is going to be from deals where they front load a lot of the fees, and I think that's and also their partners cover some portion of the capex for the build out. But I think that's what the market is really waiting for. And the funny thing is, Oracle comes up with most of the Bitcoin miners I talked to. I was talking to Hut a few weeks ago, and they kept mentioning Oracle, which was for me, it was very interesting. And at some point, I asked them, I was like, "You keep mentioning Oracle. Is there something going on there?" And they couldn't reply, obviously. But it's very interesting because obviously Oracle right now is positioned to be one, if not the company with the most data. I think Microsoft is right now has the most data centers, but I think Oracle is going to be the one with most of them, and a lot of them in Texas, which again, you got Iris Energy in Texas building a massive pipeline, which, in my opinion, would be very silly if Oracle didn't try to tap into that pipeline. Since again, I think there's going to be a shortage, not just on energy shortage for me is super clear, but on compute, pure compute too, which is why I really like Nebius, because their main business focuses on pure compute and AI infrastructure. Obviously, another thing I like about Nebius and the very big differentiating factor from CoreWeave is their subsidiaries, which, for example, you see like Toloka, you had Bezos invest, you had the CTO of Shopify join them and invest. Shopify uses Nebius right now as their main business for GPUs hosting. You have ClickHouse, which is growing to be the biggest data analytics and aggregator company out there with massive growth, which Nebius has a big stake in that. It used to be part of Nebius. They spun it out as a complete different business. So it also gives you a bit of vision into where the current subsidiaries can go, because we see they spun out ClickHouse. It was their business, their company. They made it, spun it out, worth billions right now. Soon it's going to eclipse the valuation of Nebius itself if the Nebius stock doesn't rise. And obviously Nebius has a big stake in it. So that's why I like about Nebius. I see it as a AI infrastructure play plus a little AI venture capital firm with all they have Aviride, which is the autonomous vehicles, plus the food delivery robots, which is a very interesting business, and I think is the future, both the food delivery robots plus the self-driving cars, which hopefully they said we're going to see at the end of the year in Texas. Again, Texas is everywhere.
Yeah.
With Uber, a partnership.
Yeah.
And they have the Triple Ten, which is an online education platform for STEM re-education, which is the fastest growing right now. And another thing I like about Nebius is also they try to build their data centers from the ground up. And what I like is it's fully integrated, so they don't have to use any outside partners to do it. obviously, some of their data centers are co-locations or their partnerships with, for example, Data One in New Jersey. But it's all built in-house by Nebius, which allows a lot of customization and cost control, which I really like. And they're planning to have a massive pipeline too. So I think the market is big enough for all of those companies to succeed. IREN Energy, Cipher, Hut, TeraWulf, because in my opinion, as I said, there's going to be a shortage. There's not enough of them right now. Nuclear is becoming a thing in like late 2027. Oklo said they're going to have their first SMRs up and running. If they do, obviously, I expect delays in that. So I'm more into the 2028, 2029. I think we're going to see mass production of that all after 2030. So till then, especially, there's a massive gap that needs to be filled. With the US has been left behind. There's this graph that shows the US energy production over the years and China. And China is just going parabolic. And then the US is almost flat.
Right.
And I think with the amount of data centers that people are planning to create in the United States, I think there's going to be the shortage in energy, which that should value megawatts much better, much more than they're valued right now. And I think obviously a lot of people are going to pile into these companies that fill in that gap, which is IREN Energy, Cipher, all the Bitcoin miners transitioning. For example, I don't like CleanSpark anymore because they're not planning to transition, which is very weird for me. Bitcoin mining has an end date. You can't do it forever. So what are you planning to do? Just liquidate the company when you can't mine any more Bitcoin profitably? What's the plan with that? So transitioning now is the time. Now you have the perfect, everything just falls in together and you have this perfect situation to transition, which is what IREN is doing. But IREN, impressively, even their Bitcoin mining business has grown at their exahash growth has been astonishing over the past 2 years. So you can see that this company is performing. They're meeting their very ambitious targets, which they had for the 50 exahash in such a short amount of time.
Right.
They reached it. So you see they do have which is why I really like IREN Energy, you have a track record. Management also listens to shareholders. Shareholders were spamming them to relocate. You can't be in Australia. You need to come back. You need to come to the United States. You need to tap into this market, and they listened. They're doing it. So that's also another thing. I read. Oh my God, Figma is going to open at $80, from what I see. Wow, I bought in at 26 at the IPO.
Oh wow.
That's yeah, I've been waiting all day for it to open. If it opens at 80, I'm gonna have Wujo tonight. Not trading it, but the indication is 55 to 80. Wow.
Right.
Insane. But again, anything AI, also okay, Figma has very good fundamentals and impressive growth. And again, all these companies need compute, and there's not enough. And we even saw it with ChatGPT when the whole image thing started. Their GPU started melting because they didn't have enough compute to be able to power this whole thing, and it started having limits on everything. So we see it happening in real time, and with the millions of startups that are being created right now around AI that require compute to be able to work, I think, and 90% of the startups being created right now have something to do with AI. And all of them need compute, which is another reason I like Nebius. Because Nebius is like, okay, you're a startup, you need compute here. We have cheap, come take it, come rent it, I'll give it to you. They're not so much relying on big deals with hyperscalers, which would be nice because you have a predictable cash flow. They're 10-year deals, as we've seen, like even TeraWulf, it was a 10-year deal with Core 42 from G42, which I hope gets extended at some point. That would be a nice catalyst for them. But obviously, what their Nebius's business model lacks is that there isn't this big clarity into cash flows that you could get with a 10, 20-year deal with hyperscalers. But they cater mostly to like medium-sized and small-sized businesses that need compute, can't afford compute, don't have the know-how to create data centers, don't have the resources. And that's mainly what they focus on. But also, companies that focus on getting these big deals are also going to be very, very beneficial in the next few years, because even the hyperscalers right now, the amount they're growing and how much they're pushing into AI, they will need to outsource a lot of their compute. So I think ICE Energy and Cipher definitely positioned to capitalize on that. And because I've been a shareholder in a while, it made me very, very happy when I saw you posting about them and being bullish on them. And I think that's when a lot of people, by the way, started noticing you. When you, especially when you start talking about ICE Energy, with the track record you've had in the past year with the quantum stocks, with BTQ, Rigetti, D-Wave, all those things that have just skyrocketed. And then you started posting about IREN, which IREN has a big following on X. People
Yeah, it
are
does.
very
I didn't realize
passionate.
that before, but
Yeah,
I've
and
been
very
pulled into that
passionate.
community.
Cult-like, a bit like
Yeah, yeah.
Palantir, a bit cult-like. As soon as you post something
Yeah,
negative,
the night before I released my tweets about Opendoor, I was on like it was a Sunday night. I was on like a 2 hour spaces with a guy from Thailand who's like this like he knows more about iron than
the
any person I've
France
ever.
was it? Or
Yeah, exactly,
yeah,
France.
yeah, yeah, yeah.
And so it's a
I
two
fell
two
asleep. I
hours of
couldn't.
iron on
Yeah.
a Sunday night. Like it's great.
No, no, that guy knows, I think, more about iron than a lot of people working in iron.
Yeah.
It's crazy. There's two
But
people on
then,
it, him and
like
Adefa.
he has a whole group of friends and
Yeah.
colleagues. He has these spaces, and
No, no, I always like
it's great.
read what he is. They're so analytical, and he has so much knowledge on pure data centers and the
Right.
electrification part and latency. And like he dives so deep into it, and you know, and again, that's why people from management teams, again going back to Opendoor, need to be on X, because there's people like them that are very
Yeah.
smart, very analytical, point out problems, point out good things that you can actually benefit from, you know. And there's people like that on Opendoor. As you said, the guy from Wall Street Bets, he posted again, right? And both his posts are insanely analytical, detailed, with recommendations, with what they could do different, how they can turn this business around. Uh, and I think they need to tap right into this opportunity, because I think it doesn't last forever, the retail hype. It only lasts, as we can see with Robinhood, as we can see with Palantir, if you embrace it,
Mhm.
which is what they did. If you keep the retail crowd, focused on your stock, because you keep like they need a treat every now and then, the retail crowd. And if you give them that little treat, they always stick with you. But they need to remember why every now and then. Otherwise, they jump, because retail is more trading than investing. They jump from one stock to the other, to the other, to the next. And I think you need to be there to keep them focused on, this is who we are, we're embracing the crowd, this is what we're doing to move forward. Clearly communicate with the retail crowd what you're doing in your business, how you're planning to change the business. And I think it would be a massive mistake from Opendoor if they don't capitalize on this opportunity. For example, I think they should have you on the earnings call asking questions. After everything you've done for the company and for the stock, they have those, sorry, but I call them a lot of times the stupid analysts that, a lot of them cover a million companies, so they don't, they, they know the basics. They don't dive deep and have sometimes very silly price targets and all that stuff. They have all those people ask questions, but they don't have the people that are fundamentally important for the company, which is yourself. You have all this crowd right now reading your posts, following you for Opendoor, waiting to see, like, I'm pretty sure everybody's going to be waiting to see what you have to say after their earnings and the earnings call. I think you're one of the first people are going to, that the retail crowd is going to wait for, to see what you have to say. So I think if they don't embrace that, I think it's a bit mistake not having you on the earnings call asking like 2 or 3 questions that pointing them a bit where it hurts to get some answers, and I think would be a massive mistake. Let's hope that after the quiet period, because I've had companies in the past say, "Oh, it's a quiet period. We can't really talk or have an interview right now." But they replied after the quiet period end, and so let's hope it's not an excuse and that's what it actually is. And after that, they embrace it. But hard to believe since Kari doesn't even have an X account. You're seeing all this thing happen on X. It has literally saved your stock. X is the reason your stock has been saved, and you don't even make an account now?
I know.
Like, that's why for me, it's hard to believe that they'll embrace the retail card. Like, weeks now, why don't you have an account? Start communicating. You've been trying to talk to her. You can't tag her, as you said, right? And tweets. People want to communicate with her. So I think I don't know, but just the fact that weeks now, because it's not yesterday that you started tweeting about it, it's been weeks now that we don't see her making an account. I think it's a bit disappointing and discouraging. And hopefully they get in touch with you, because I'm pretty sure you can have some very, very constructive.
Well, now they know they can ask Adam to get in touch with me. So Adam knows how to get in touch with me, right?
He's gonna be the
But
vessel through which they get in touch with you.
I have another phone call though. I got to do,
Yeah,
George,
that's
at
fine.
the hour though. But
I I loved
this
our
is
talk. I think
this is like Joe Rogan, 2 hours on
yeah,
Opendoor.
exactly. I thought it was gonna be an hour, but it just kept going because it's always so nice to talk to you. You always have so constructive things to say, and as I said, it's always an honor to talk to you too. Um, I
Well,
think a lot of
likewise.
people.
You have a better ability than me, George, of like covering all these companies like in great detail. You know all the, whether it's nuclear or BTQ, IREN,
I try
Cipher, like
to. Yeah.
you're on top of it all. You're like my Greek chat GPT. I could just like call you up and
I try to do my best. I'm like glued in front of my screens 24/7. Because I like what I've said in the past is I like researching and going through the comment more than playing like video games or going out with my friends, or like I'm just obsessed with this. And digging through the companies, analyzing them, seeing what they're doing, talking about them. It's pure passion and love. So and it's also from your side. I love it when you talk like the companies you find are gems. Like you found BTQ before I found it, and nobody even had. It was a $30 million company.
yeah.
Nobody had heard of it, but you managed to find it, which is it takes a lot of skill to be able to study
Well,
something.
I think to find these 100 baggers, it either has to be like a company like Carvana or Opendoor that's like on death's door, or it's got to be like trading on the Canadian Stock Exchange where like nobody's paying attention to it, I guess. And so like maybe we'll have one of these Zooms in a year or two from now, and we'll both you and I will be like become experts on the Pakistani stock exchange or something like that, because that's what we're gonna have to like really get into the weeds in some of these far-flung places to find these like
I was
100.
going into the Polish ones now,
There you go.
actually, because Poland
There
has
you go.
been doing very well. So I was like, maybe some Polish companies.
I only know one stock in Poland. It's that like the video game company there. I forget the name right
Oh,
now.
okay.
The one that made Cyberpunk is
Oh,
traded on
okay. Yeah, yeah.
Poland. Yeah.
I think no, like Argentina used to be very interesting, and you've seen like companies have just exploded higher since Milei took over. Greece has some, I think, great opportunities.
You got any good
I've
tech
been,
companies in Greece?
there are some. I'll DM you some of the good ones I've been researching. There's one that I can't talk publicly because the guy that has baptized me owns it, but they're blowing up right now. So I think that one is a great opportunity. And there's other too, because Greece is slowly recovering. So the stock market is
Israel's
it,
always been a hotbed.
Israel too. And the funny thing is, their stock market was hitting all-time highs while the war was going on, which
Yeah.
I thought was kind of crazy. But for example, Greece, the Grek ETF, which I've told everybody to buy, is up 56% year to date, outperformed any other country. So, we're doing okay. And I think, yeah, countries like these have some opportunities that we could look for. So,
Right.
100%. So, anyways, thank
All
you so
right.
much for taking the
Thank
time
you.
and 2 hours. I know
Thanks,
you're
George.
super busy.
Oh,
And
appreciate it. It was fun.
let's hope Opendoor proves you right and believing in them. And as I said, I also have a small investment which I might increase after this call. I will see.
Okay.
um,
You can
but
tweet us after. Let us
yeah,
know your
yeah,
verdict.
I'll also upload this at some point, probably today,
Okay.
because I think that you had some very, very constructive things to say, and you provided a lot of clarity.
Hmm.
Um, like you answered most of my questions into 4 questions because you talked so much, and you discussed so many aspects of the company. So I didn't have to ask much about it, which was great. So I think people will really appreciate everything you had to say. You provided a lot of clarity, a lot of detail into why you believe in this company and why you think it's a 100 bagger. So I think everybody's gonna appreciate this recording and everything you do. And I'm really glad you've blown up on X because you definitely deserve it. And it makes me really happy to see that people are finally paying attention to what you have to say. So yeah, thank you so much.
All right. Thanks, George. Yeah, just let me know whenever you post this and I'll retweet it and stuff.
Perfect.
Okay.
Thank you,
Thanks
Eric.
a lot. See
Thank
ya.
you.
Have a
Have
good weekend.
you
Bye.
too. Bye.